Bitcoin finds itself struggling to rally up, struggling to push past $63,500 and close a daily candle higher. In today's video, we are going to be taking a look at the technical analysis on Bitcoin, taking a look at what I think is likely to happen next and all that wonderful stuff. As I get into today's video, if you do find it useful, informative, smash that like button, guys. I really do appreciate that. Helps support the channel massively. If you happen to be new to the channel, why not subscribe and stay up to date with all the content that we do here at Cheeky Crypto. Guys, let's jump right down into today's video. So here we have Bitcoin paired up with USDT. We're on the daily Binance chart, and you can see here this blue line coming through here. This is the 50-day exponential moving average, and it has been heavy resistance for Bitcoin since we lost it, area of support for it on the 24th of April. Once we lost it as support, it became resistance. We tested this out multiple times on the 25th of April, 26th of April, again on the 30th of April, trying to really push on the 4th of May, 5th of May, 6th of May, 7th of May, 8th, and of course the 10th of May most recently, where we saw again another rejection on the 50-day exponential moving average. Ultimately, Bitcoin's price action has been hit hard here, and unfortunately the bulls have really struggled to rally up and push the price of Bitcoin high enough to actually consider a breakout situation. As I've said many times in the recent videos, this is an ideal short opportunity when we saw those rejections. So on the 10th of May, for example, this would have been a great place to put a tight stop loss and try targeting out into a new local low for BTC. Now obviously we'd still be in profit at this point, but we haven't actually gone down into that new low at the moment. So has the probability of such a move changed, or is it still highly likely that we do see slippage down towards $53,000? Well, in order for us to understand this, we need to first of all see where we sit within Elliott wave theory structures, because it is possible that we do actually have a breakout situation here before we continue our move to the downside. Okay, so Elliott wave theory looks at this as a potential A wave pattern right inside here, moving up towards our 50 simple moving average, where we got rejection here on the 6th of May. At the moment, we're in a corrective pattern to the downside where we're likely to find support, and we've already met our typical expectations on this, but I suspect there's a little bit more of a move to the downside. From there, I expect a break above the 50 simple day moving average, although I expect it not to set a higher high on the macro scale of things. I would expect us then to get rejected and still head down towards our 200-day exponential moving average, the white line that is coming through the chart here. Now, what would change? What would prevent a breakout like this? What we'd have to do there is see Bitcoin's price actually come down into a new low already, lower than 56,552, and it can be a wick. It doesn't have to be a closed position. Okay, so we'd be looking for a breakdown in that particular scenario. Now, how would you trade this? I would be trading this move on a breakout, not on anything else. I wouldn't be wanting to go long on BTC unless there was a good reason to do so. So I'd be looking at the 50-day exponential moving average as that. If we get a closed position above, that is where I would go long, and I would target out just here into the area of previous resistance at around the $68,000, maybe $68,500, right? That would be how I would look to do that. If we do come down towards our low and we come down into a new lower low on the daily time frame, heading towards our 200-day exponential moving average, then what I would do is I would be looking for a long position, finding support on the 200-day exponential moving average, tight stop loss lower than 50,000 ideally, and we'll be targeting out a clean break up higher towards a new all-time high, actually in this particular case, at least $70,000 to $75,000. Okay, great risk reward ratio, and that would be how I would approach this particular trade idea on a long. Now, if I were to be trading on leverage like this, I'm going to be using BitGet or Blowfin. Those are my two go-to exchanges when it comes to leverage-based trades. Okay, I don't tend to use any other exchanges when it comes to leverage. It is, of course, BitGet and Blowfin. Those are my two chosen ones. I find them very easy to use, very self-intuitive, and all that kind of good stuff. If you haven't yet got accounts for those, you can find links in the description down below. And if you do use that link, it really helps support out the channel. So why not check it out? And of course, there's a whole host of different rewards and bonuses and all that kind of stuff, depending on where you are in the world. And all the terms and conditions can be found on their websites accordingly. Okay, so that would be the approach there. But what about, momentum? Well, momentum on the daily time frame has shifted down a little bit, and it shows us with the idea that we could still rally up a little bit higher, indicating we might get that little breakout situation that we were talking about. Okay, so we want to be aware of that. Okay, so as you can kind of see here, we started to move down on the relative strength index. The divergence indicator is still lower than the 50 level, indicating that we are still in bearish territory here for the RSI, the relative strength index. There's no divergences on the daily time frame. There's no bearish or bullish divergences occurring between price and RSI, so all of that isn't too bad either. Our MACD is showing some negativity here. So again, it's showing you what's just happened over the last few days. Nothing much to kind of note with the MACD indicator really. So if we go ahead and throw on some smart money concepts, you can see here that we're looking to fill out the fair value gap. We're still in bullish movements to the upside according to smart money concepts. Equilibrium is lower than the lower than the 200-day exponential moving average there. So that's looking pretty good. There's nothing much to kind of be too concerned with around that. The 200 EMA is in line with a fair value gap as well. So a wick down a little bit lower, again, would be fine. I'll be looking to make sure that we had any closed positions higher than that 200-day exponential. Anything lower could be seen rather bearishly. So we want to avoid that where possible. Okay, so smart money concepts isn't too bad. Our Gaussian channel on the daily time frame has turned negative. This is the first time since actually August of 2023, right? We saw this move to the downside. It then turned red before we actually had a rally to the upside. And so we want to just be aware that although this is red in its nature, we are still closing above its lower band at the moment. It's still possible that we move on down here, and I'm not terribly too concerned about this on the daily time frame. If we roll this up into the weekly time frame, very bullish on the weekly time frame. Okay, the Gaussian channel is green. We're well above it. It's all looking pretty good on the weekly time frame here. We are above the 200 weekly exponential moving average, the 50 weekly exponential moving average, and the 50 weekly simple moving average. All of those are looking good. With the 50 EMA and 50 SMA above the 200 EMA, basically everything is rather bullish on the weekly time frame. It's hard to be terribly too bearish. We also have the idea here of a bull flag situation, right? We have the tilting down here. We also see lack of volume as we had this initial pole movement to the upside. Ultimately, this has actually given me a lot of confidence on the weekly time frame. I just think we've got a little bit more volatility to be expected on the lower time frames before we can actually appreciate what happens next, which is another parabolic run to the upside. I think we're in pretty decent positions right now for the crypto market. We've seen the altcoins bleeding out massively, which is a fantastic opportunity. We can also see here Bitcoin pulling back quite a bit, and it's also showing us with huge opportunity to build into Bitcoin if we wanted to, if we hadn't done so already. But for the most part, actually on the weekly time frame, we're looking pretty good for Bitcoin to continue its move to the upside. And I think we're going to see that probably in the kind of month of June, July, somewhere around there, I would have thought. Hard to always time the market, but it's going to be I'm going to place my pin in at the moment, and we'll see whether or not that changes over time. But looking at it based on how the weekly time frame is reacting to price movements and the stochastic RSIs on the 8-hour and 12-hour and so forth, it's not looking terrible. I do think we've got another week or so of some more volatility for Bitcoin. And once that kind of bottoms out, I think we're going to see a really good run to the upside. Hopefully we can kind of pull back down into that kind of 52, 54, somewhere in that range. That would be a fantastic way to kind of finish this one off. So that's kind of where I want Bitcoin's price to finish, because it wouldn't be a very nice, neat structure before we actually get into that next kind of big run to the upside for BTC. That would be kind of I'd hope everything would kind of come together. Smart money concepts is also looking pretty good. Again, you can see this fair value gap fills out at $53,000. Again, a good area of support right the way down here as well. So it would be nice to see that one play out. Still bullish on the weekly time frame as well from a smart money concepts point of view, from an Elliott wave theory point of view. Everything's actually kind of coming up quite nicely here for BTC on all of these different time frames. So I think for the most part, guys, everything for Bitcoin is okay. We're seeing a nice amount of corrective action here. Nothing terrible, nothing too drastic, nothing that's kind of overly too scary. It does show us with some great areas of accumulation. And all in all, I'm not too fussed over where things are at the moment. If you haven't done so already, though, I think it is very important that you check out what is going on with some of the other projects that we talk about in the space, specifically this one here from JB, where he talks about 𝗕𝗘𝗪𝗧 and the things that are going on over there.